Welcome to the new StockMentor.com with the same old StockMentor, me, Brian Johnson. Entering a new week of trading. Had an abbreviated week after last week, and the Bears, kind of won in some indices. In some indices more than others, but overall, looks like we've got at least the start of something from a bear side. So now, all the bears out there, what are we looking for? Looking for some confirmation. We need something from the bears again this week. Would really rather not see it go all week and end up sideways for the week, even if we have a good move down or kind of a half move up or whatever. I really would like to see the Bears take over and finish down again by the end of Friday. That is what all focus will be on to see if we are finally at that pullback, the pullback that everybody's been talking about for about 2 months now. So here we are. I drew in some extra lines this week. I want to show you this overhead line, which is held really pretty nicely. We did not quite make it though the last time we were up here by the Dow. Now we have this little consolidation right here. Still could resolve itself up. And if it does, if it can get back above 11.9, look for it to maybe make this blue line eventually. That would be a very, very good idea for those of you that like to take speculative shorts. This might be a good opportunity up here, and certainly be looking at this area in that particular case. The Dow has been stronger of the indices over the last couple of days, and that's certainly something else we want to see. If the Dow starts to pull back, then maybe we have a good opportunity to short it. I typically focus a little bit more on the S&P, but in this case, because the Dow's been lagging, we start to get breaks back below here and ultimately here. I think we might have some opportunities within the Dow to maybe make a few dollars. Once we start breaking these lines here, these are good opportunities to start looking for some shorting shorts, especially from at least an intraday standpoint, if not for a longer term hold where like a swing trade where you can get in and hold for a couple of days, which is by far the easiest way to do things if you can get a good entry. So if we can start to break these levels down here, I think we might actually get that, and I'll show you what I mean as we push forward here. The Dow Daily, look, little white candle, a little wick on the top of it, but overall still up on Friday. So we had that Tuesday, Wednesday, Thursday pullback. This Wednesday, Thursday here. Then your Friday to the upside. So the Dow just not ready to quite give up the ghost yet. But because it is a little bit of a lagger, it does take a while to turn this boat around. NASDAQ 60-minute is going to give you a better example of that. And you'll see this is, I'm sure, what a lot of people were looking at. Shoulder, head, shoulder. I'm not sold on it yet. We got to get some breaks. It's got to get back below this 200 period moving average here for me to start looking at that. Even so, not only below it, but closing below it before I'll really start looking at it in a more major way. However, I will give them the pundits out there that sure, you bet it could be. Absolutely. It certainly looks like it, so the charts just are what they are, and we'll go ahead and accept what it is right now. So the potential, you can divide this up kind of one of many ways. Head and shoulders within head and shoulders sometimes come into play. Some people might have called this a shoulder and a head, and maybe a shoulder over here. I don't see it though. I think the bigger play here would be this as a shoulder, this as the head, and maybe this as the shoulder, leaving us with this kind of a neckline that I have drawn in here in the green. And that could make for a pretty decent pullback once we see that in the NASDAQ, and it has been very weak lately, but a little bit too early to really, for me to start jumping on that bandwagon. I'd like to see it get below this area here and start closing there on the 60-minute to get more bearish. Now, from a daily, definitely starting to get more bearish here. We had not one touch, but now two touches of the 20, and the second one held, kind of didn't hold. It's actually below the 20-day moving average, but if it's only a point or so at the end of a Friday, I'm really not going to split hairs with it. But if we get any continued weakness next this week, this is the place to start now looking at the bigger pullback here. I think we're looking at coming right back down into this lower support, and anything below that, right back into this 50. And these two areas are going to be targets, even I think on that head and shoulders. I haven't figured it out, but I think the target on that head and shoulders is probably going to get us right back into this area right around in here. So certainly something we want to keep our eye on. If it can stay below that 20-day moving average, the Nasdaq could end up being weaker, but I'd like to say could end up being a really good short. And for those of you that like to short the Nasdaq, great, but I'm not a big shorter of the Nasdaq. However, I like to look at it to see if it'll at least be a leading indicator for us as we move lower. Nasdaq weekly, look at this, all the way back down last week, very weak, 2.37%, down 55 points. Let's get below 2250. Okay, now I'm really interested from a weekly perspective. Like to see another red candle and have it start heading its way back into this area here, which is quite a ways down. That would mean definitely more bearishness for the rest of the markets. SPX 60-minute drew that overhead line too. I'm not even convinced that if it got back above 1290, 1295 or so, that it would ever reach that blue line. It's just the markets were really weak last week. I actually was. I was actually pretty impressed with what I saw from the Bears last week. So even though we didn't necessarily, drop to the floor or anything like that, it was still good movement. It was still strong by the Bears. So at least, once again, still it's a start. Here we are consolidating. We have this line here of support yet to work on. We kind of grinded our way down last week, the weekend, Thursday and Friday, that is, up and then back down right here, resting between the 20 and the 50 period moving averages right here on the 60 minutes. So I really would like to see this one start to get below the 1270 and ultimately below 1260 before we really start getting hot and heavy on the whole bear side. Otherwise, if you want to get more speculative, you can start to look for stuff in through here, but it's a lot more dangerous if you do that. Right now, we're just consolidating. You can see what I'm really looking for. The Nasdaq's already revisited and kind of broke the 20-day. I'm looking for that same action here on the S&P. If we can get back below that 20-day moving average, back below 1273 coming into Monday, Tuesday, whatever, this next week, then yes, I would tell you to really start looking at a shorting opportunity here in the daily, back to at least 1260, if not below that. We could, if we break this area, we could potentially wind our way down into the 50 if we can get below this area here. But let's start right here. Revisit of the 20. Make sure this is marked on your charts this next week for support. We break that. And now we could be talking about a little bit of a further pullback back to 1260, and that's 10, 12 points. Not too bad on the S&P there. Weekly, same thing. Not quite as weak as what the Nasdaq was. This is more of a sideways consolidation, and that is why I'm looking for the pull back. I'd really like to see this thing drop. And below that 1272 area is still a good place to be looking for that. VIX daily, we saw moves up last week in the VIX. So while the S&P was down a little bit, the VIX was up a little bit. You can see from a weekly, we're back out of this pattern we've been watching. I like to look at it in the bigger picture, and the bigger picture is right now, fear might be starting to come back into the markets, but we've been here, done that. See, we've been up to this 19-ish, 20-ish area before, and it just falls back out of the market. I want to see this confirm any kind of a move to the downside. We'll be watching this as well. Waiting for that VIX to get up and over about 1920-ish area and hold above that area to really start getting a little bit more bearish on the market as well. Apple, free falling right now. Perry would be proud. So we are dropping straight down right now in Apple. I would start to watch for a bounce early next week in Apple. But this thing could continue for a while. We still have 322 as the 50 and then 320 below that. One of these two levels, if it continues to show this weakness, 322, 320 are my levels to be watching very closely. Apple starts to get below and break these levels here. Okay, we could be in for a much larger pullback in Apple. Could take us back down into 310, maybe even lower. Yeah, with the whole Steve Jobs news and whatever else that's been going on, and the fact that the whole market's been strong for a while, Apple is due for a pullback. So if you're a big Apple buyer, I know these look like excellent buying opportunities, and in most cases, I'm with you. But right now, this is heavy, heavy selling right here. This is really pretty big, and you can see it by the volume down here. It has dwarfed what we've been doing in the past. This is precisely what I was talking about when I mentioned, this pullback could get volatile. Well, here you go. This could be a sign of that right here. Apple weekly, same type of thing. Got up and came back down, hit that upper blue line last week. after the Steve Jobs news came out Monday. Then the markets opened Tuesday, and this is what we did. Up and then right back down by the end of the week. Lots of volatility, lots of opportunity. But you can see 320, 310. Those are good areas of support here on the weekly. We'll see if Apple continues its march to the downside. FAS did a couple things a little different this week. Took a lot of lines out, put some new lines in for you. I think this makes it pretty clean right here on FAS. We're right to the top of this. Any target or any shoots to the downside, I'm looking for the target of this right down here. So bottom line and the 200 down here. If we can get back below about 29.50ish or so, might want to try to dabble in that. That might be good for a buck. Above $30.50, now we're on a breakout, and then we're looking at maybe 31, and then above that maybe 31.50 or so. So we can get back above $30.50. Look to every 50 cents after that. 31, then 31.50 to the upside. Still good plays. These are good plays, both long and short from an intraday perspective. Daily could work out the exact same way. It might wander around. You can see the chop that we're back into. This thing's had a pretty good run to the upside. Pull back, run up. Pull back, run up. We don't know. Is it going to break to new highs? If it does, we're watching this overhead blue line for a target area on that. If not, I really like it below 29. I think below 29 would be a really good place to get in and maybe be able to sit in for a couple of days on FAS. FAZ, then I kept my lines in that we've been following for a while and just extended the chart back a bit. And you can see I love hit the bottom, hit the top, hit the middle. So these lines are beautiful on FAZ. I think it's very clean right now. This would be one that I'd be more apt to play just because it is so clean here. Below 840, looking for a target, then back to 820 or below. Above $9, yeah, you could take it for 20 cents, 30 cents. To the upside, I'm really more sold on above the 930ish and really above kind of 960ish range from a bigger trader's standpoint. You can see here on a daily a little bit more consolidation look right here. If we start way back here, you can see it's been up a little bit, down a little bit, and right back to center. So it's been wandering along this line right here. But above the 20-day, I like it. And then below 820, let's call it 820-ish or so, I like it for a short. To the long side, you're going to want to be careful. We're still counter trend. This is still speculative down here. So you want to be very, very cautious. But we can get back above about $9. I do like it to the long side there as well. Okay, that'll do it for today's video. Hope you guys are enjoying the site. Still a lot of bugs to work out, and I do apologize for that. And one of the bigger bugs is the video. Is the videos themselves. There's I have a video press on the back end that I'm using, but the people that set up my site put the site up Friday morning, sent me an email about 9:15 my time, and then disappeared the rest of the day. So they launched the site, and then they left for lunch and never came back. No emails, no phone calls, no nothing. I couldn't get a hold of them for any questions. They didn't give me any answers. Needless to say, I'm not extremely happy with them. It's not very professional at all. I was in the computer business for a number of years, and when I was a systems administrator, we never did updates during the week. We always did it on a Friday night after everybody went home, and that way we had Saturday and Sunday to fix any problems that might have come up. And we certainly, followed up with people when there was a launch being done. We didn't just leave them to hang. So I'm a little upset about that. I'm still working out the bugs. Hopefully I can get this cleared up by Monday, Tuesday, though, guys. Thanks for sticking with me. Hope you are enjoying the new site as it is right now, and we will see you again, as always, tomorrow night.